Okay, so here is the background of ConvertTheVert. And it all starts with swing trading, which is what the masterclass initially was designed for, to teach people with small to medium size accounts how to, through the beauty and the leverage of options as opposed to stock, be able to trade in our wonderful US markets not on a day trading basis, but on a more relaxed, anywhere from say 3 to 5 days or even out to 2 to 5 weeks. That's called swing trading, putting on a trade, not anticipating and not predicting, but learning how to read the markets and read the charts so that we can participate in certain moves to the upside, certain moves to the downside. The swing trading aspect of our business, though, has shifted because the market has shifted. The market has become so volatile with its violent swings in this bear market, even before the bear market, that swing trading is a lot more difficult, especially for brand new people. And so there's, and I'll show you, like stocks, for instance. Let's just look at Apple as an example. I mean, look at the weekly chart. You don't even have to look at the daily, but we'll cover the daily chart. I mean, just looking at this, how do you swing trade this when it does this? Oh, we're going this way? No, we're going this way. Flat, down, up, down. Just look at the last week. How in the world, oops, wrong one. Look at this. You tell me how would you have traded this if you just look at from a swings trading perspective? Like, so here's the beginning of February, and you get this gap up, you know, probably news, maybe it was earnings. I don't remember. It doesn't really matter what it was. You had this, you know, choppy action and then a gap up. The next day after the gap up, you get this huge move to the upside. You clip some resistance levels, and then you pull back at the end of the day. Well, that was kind of weird. It didn't kind of finish on an up note. It finished on, you know, sort of a daily pullback here, pretty significant one too. And so what's going to happen? You know, well, you know, from a swing trading perspective, stacked moving averages, you get a little bit of a pullback, you get this, you know, and then, you know, let's go. And put on a trade for, you know, swing trading. I don't know, 2 weeks from now, 3 weeks from now, maybe you put this at the, you know, the monthly expiration for February, somewhere like over here. I don't know. And what happens the next day? The next day, this is where you finished. Okay. The next day you open here, you gap down in the morning, and you're like, what? I just put on a trade to go to the upside. What's going on? And then you see it drop down to here, and you're like, ugh, like I'm way underwater, especially if you bought calls, you're underwater. So you say, you know what? I'm going to get out here. This is going to hit my stop. I'm going to get out here at this stop. And if we get, you know, if it ends up being just a pullback, I'll get back in. So what happens the next day on Apple? We gap down again, and you're like, oof, good thing I got out of that. Or if you didn't, imagine this. Imagine that you saw this gap up, and the next day you said, you know what, if we continue higher, I'm going to get in, right? So this happens, and you get into the trade somewhere around here or here or here, right? Look what happens at the end of the day. Wrong. Look what happens the next day. Wrong. And then the next day, you gap down again before you finished up. So before this thing reversed, it opened here. It actually was a gap down from this day. This would have gotten a lot of people scared and got out. And then it did this, and you're like, oh my God, I guess it just was a pullback. So guess what people do here? What do you think people did there? After this, I'm like, oh my God, all right, finally. Yes, it was just a pullback. What do you think they do here? Anybody? Well, no, I'm saying if, you know, get back in, yeah. Let's get back in. They buy it. What happens the next day? Gap down and then down to here. What happens the next day? Gap up. Oh, but then down to here and then down to here. So, oh, crap. So now I'm blasted. I'm out of the trade. But at the same time, you've got people that saw this spike and said, Apple, puh, I'm going to short this thing. So they put in their shorts here or whatever, and they use, this is your stop or whatever, right? And so you short it, but it doesn't end up hitting your stop. It goes straight up like this. So if you short, you're screwed. If you went long, let's just say if you went long here, you're screwed. Then you get this rebound and go, okay, I'll go long again. Now, I'm not talking about day trading. I'm talking about swing trading, like 2 to 3 weeks out. So, okay, boom, boom, reversal. I'll buy it now. It's been through its shenanigans. 1, 2, and the third day, not so good. Fourth day, you're screwed. Fifth day, you're in a panic mode. I'm out. Ugh, awful. Then the shorts go, you know what? Apple's going down. I'm going to short this thing. Gap up. Wipes out all those shorts. So then you think, all right, if this continues higher, I'm going to get back into Apple. It's, had it. Look at this beautiful pullback to the whatever, right? And then it gaps up. Okay, next day, if it's higher, I'm going to buy it. So they buy it here. Then what happens? Screwed. And if they shorted here, thinking, okay, I'm going to short this thing down to here, screwed. How can you swing trade Apple? And Apple's one of the most liquid, most fantastical stocks there is. You can't swing trade this. And so we've all come to realize we cannot swing trade these charts. So, and if you look at even the SPY, okay, well, let's look at, maybe we could swing trade, the S&Ps. That's got to be a little bit more consistent. Well, WWMD is, what would Michael do? I don't know. Go long, go short, go long, go short, go long, go short, go long, go short, go long, go long, go short, go short. I mean, look at this thing. I can't even sing it. It's so effed up. So now what? You can day trade this. Yes. The day trading is fantastic, right? Boom, boom. Fantastic, right? Boom, boom. You can day trade all day long. But I went a little bit more than a day. But swing trade, very difficult because of the swings, right? So these weekly trades are no good. I'll just show you like one or two more, just so you can really get the feel. Microsoft. What's Microsoft doing? 8%, 5%, 4% up. Like, what's up with Microsoft? Nobody was talking about it, and then it hit this level, and then ka-choom. But it did that once before and then fell. It did that once before and then fell, and then went up and then went down. Look at this. Does this look like steady Eddie to you? This just looks like, somebody, heart, what do they call that? EKG? Tough to swing trade. Oh yeah, let's buy long calls, man, and hold it till April. Yeah, good luck with that. Oh, let's buy puts, man. Yeah, beta decay, you're screwed. So I've kind of made a case that this particular market is very difficult for swing trade. Now I'm doing it. I am swing trading, and I have a ridiculously good track record with swing trading. I have some trades that don't work. I have some trades that work, but for the most part, the swing trading does work, but that's me. And I deliver them to you, and sometimes you take them, sometimes you don't, sometimes you alter them. But I want to teach you guys how to trade on your own so you can trade with me. Not trade me. I want you to learn how to trade on your own. How can I teach you the ins and outs of swing trading in this market? Well, I'm doing my best. I do it every day. But I also want to give you, tools. Okay? All right, so that's this. Swing trade, pretty tough. So that leads me to, well, let's just day trade then. Maybe we should just day trade. And so day trading is kind of tough for people who have a swing account, right? So if you have like a small margin account, like many people have in the masterclass, you can't day trade in it. The day trade rule says you can have 3 day trades in a 5-day period, in a rolling 5-day, every, 3 in every rolling 5 days, 3 day trades, meaning you opened it today and closed it today. Boom, that's a day trade. You can do 1. If you do another one, that's 2. If you do another one tomorrow, that's 3. You're done. You cannot do a 4th until 5 days has passed. So there's not 2 days later you can do, or 3 days later you can do 1, and so forth, right? Well, you can't just go to cash, because some people don't have a cash account. They have a margin account, so they can swing trade and do verts and flies and such. So I want to kind of go through the narrative of how this came to be. So 0-day trading and trading flies. So I came up with some strategies that many of you might remember. Beginning of the year, we were doing butterflies at the end of the day. Just put this on 15 minutes. We were putting them on. I was using some different analysis tools and some rules. Here's today, right? And we would wait till about 3 o'clock in the afternoon, and I would place a trade. I would boom, boom, boom. I'm going to put this on for like $1.50, and then boom, 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 and we'd nail the vertical. And those were great. And as I was working on it, unfortunately, with this market, you put on a trade, let's say here, where you think, well, this is going to reverse. So I put on a trade down here. Perfect, right? Great. Set up, excellent. Momentum's going down. It'll fall right into this 39.25 bucket or whatever. And then what does it do? It reverses back up. Ugh. So I was finding that these end of day trades that I wanted to put on, whether they were up here or whether they were down here, the swings at the end of the day were killing me. I would put it here, it would swing down here. I would put it here, the last 5 minutes, remember those trades? The last 5 minutes, right out of it, almost as if it knew. It knew exactly where my little flyerooski was, and it would just go right above it and close. And these didn't work after a while as well. So again, if you have a small margin account, margin so that you can do spreads and flies, like many do, how can you tackle this market in either learning swing trades? You certainly can't day trade, right? So I started to do 0-day, which obviously it's a day trade if you close it. So I'm just going to open up, I'll do a 5-minute chart so you can see. A little easier to see. And this is SPX. And one of the reasons why I'm doing this on SPX. SPX is the cash index of SPY, of the ETF called SPY. And if you look at the number, it's actually 10x, right? So the SPY is at 396 and change, right? Yeah, 396.11. So times 10. Oops. 39.60. So it's 10 times, but it's not a stock. Yeah, you can, for charting, you can use SPX.X, but for the actual trades, yes, I use SPXW.X. That's correct. The reason I like using SPX is because it's not a stock, and because it's a cash index, and it gets settled. That's what settled index means. What does that actually mean? It means if you bought a call here and it cost you $5 and price moved up by $10 or whatever it was. Let me use a different example. You bought the 39.50 call let's say you bought it for $4. It's a lot more than that, but I'm just an example, right? For $4. And then price ended up the way it ended up today. at 39.60. Well, you don't have to close the trade because this cash settles. You don't have to worry about being assigned a stock or anything, okay? So if you bought the 39.50 call and price landed here, you made $10 minus the $4 that it cost you. You actually have on settlement $600 profit before commissions. Understand? You just have it. There's no stock to be assigned. There's no exercising. It's literally just the cash. If you finished at 39.58, what is that? Boom, boom, $8 minus the $4 it cost you. You made $4. It goes right in your account, cash settled. You do not need to close the trade. It's not a day trade. It just cash settles. If for some reason the price went down like this and it finished at 39.40, then your $4, that's the debit that you paid, you just lose the debit. Cash settle is zero. You're making zero money and you spend $4 for that. So it just cash settles. So I like the cash settle aspect of it. So I thought, okay, let's try something in this wackadoo market. What if I put on some kind of vertical? I'm going to go to another day. That makes my point a little easier to follow. Okay, so I see this and I go, oh boy, markets are going down today. So instead of doing a call, I do a vertical. Let's just say I do a put vertical here. A put debit spread. Now, just a quick note for those of you that haven't heard this before, I would strongly suggest that as you go through the material, several of the videos inside of the archives, as well as the main one really, inside of the advanced options course and the best of 2022, you've all seen that archive section. I talk about why do we trade verticals instead of just straight calls and puts. It's very extensive, and I make the case that is irrefutable. And so I'll just spend a minute here or two, not very long, just to talk to you about if I think this is going to go down, why not just buy a put? Well, first of all, on SPX, puts are very expensive. This could cost around $700 for a put in this moment in time. So I wouldn't do that. And a vertical could cost me maybe $2.40, maybe $2.10, maybe $1.90, right? And so that would be great. That's doing a 5-wide vertical. So I have the opportunity of making $260 or $290 or $310. My profit is capped at these numbers, obviously, because I'm doing a 5-wide spread. You can do wider. Obviously, if you buy a put, prices on, the profit's unlimited if it drops, but your risk is so much higher. So the main reason why we talk about doing verts instead of calls and puts is that when you buy a call, really, you need to be so perfect with your timing. And the reason for the need for that, and not only that, you need a greater than expected move. If you buy a put here and it just goes like this, unfortunately, that ain't going to be enough. What you need is a greater than expected move, and you need it rather quickly, because in the course of a week, if you bought Friday's, whatever this is, $4,000 call, let's just call it calls for now, it's out of the money, and whatever it's going to cost between now, let's say it's Wednesday when we buy it. Between Wednesday and Friday, there's something called premium decay. I'm not going to get into the details of all that, but basically the premium leaks out of this call or the put very quickly. You lose premium as the closer you get to Friday, until when Friday hits, at the end of the day, there is no premium left. So in order to combat that loss of value of your call, you need to have at least an equal amount of gain. Well, you don't want to just break even, do you? So you need a greater than expected move, and you need it to happen quick before we get anywhere near Friday. So when you buy a call, you need price to move quick, and you need it to happen with velocity. And, obviously this upward move has to be, a high trajectory. It can't just be, it just does this. The worst thing you could ever do is buy a put and have price just do this, because now price is about the same as it was when you bought it, but it's worth less because the premium is dropping out of it. Well, you can make money with out of the money calls and puts, yes, like the Robin Hooders do. Let's say price is here, and you buy a way out of the money call here, and it only costs you 10 cents. And yes, if this thing pops like crazy, very quickly, that 10 cents might be worth 13 cents. And so there is, potential for $3. And if you bought 100 of them, maybe you could make $300, etc. There is something to be said about playing that game, but more times than not, it doesn't make the move that you need in the time that you need it. Because remember, you have to pick the expiration date perfectly, and you have to time the move. The move has to happen. And not only does the move have to happen, you have to have a greater than expected move. The trajectory has to be straight up. These three things must be present when you buy a call or a put. The perfect expiration so that A, you don't run out of time, and B, the theta decay doesn't kill you. So the timing of the move has to happen in conjunction with that expiration, and the trajectory or that greater than expected move, either up or down, has to happen. Very tough to break even, very stressful, very expensive. I like verticals. If you want to go down, you want to buy a put, you can buy the put, but then you can sell the lower strike for a credit. That credit helps pay for part of that put, reducing the cost. And now you have what's known as a vertical. Now, a vertical is limited to the width of the spread. So if you do a 5 wide vertical, let's just say you bought I'll do something else here, like a 150, 145. So you buy the 150 put and you sell the 145 put, for instance, right? That's 5 wide. The max profit you can make is $5. So if it cost you $1, your max profit would be $4. If you lose on the trade, you only lose $1. So it's less expensive. You still have the opportunity to make 100% profit, 150% profit, and sometimes 200% or more profit using a vertical. But the thing that's so really great about it is that you have the ability to break even a lot easier. And I'm not going to get into details of that because that's all in the other videos. So I'm thinking in this SPX, with a move like this, how about we do a vert, like a put debit spread, boom, boom. And because it's SPX, when price drops and goes down wherever into the gutter, I don't have to close it. So I don't have to worry about the day trade aspect of it. I don't have to worry about it being too expensive buying a call or put because it's a vertical, right? And I can just let it expire and I can make my money. Boom. Except for one thing. What happens when it does this? Now, if this vertical cost me, say, $2, I just lost $2. But at one point in time, when I put this thing on, when I was down here, I was profitable. I was right, and I was profitable until I wasn't. So that's no good. I was trying these. I'll try, okay, we're reversing off the bottom, whatever, I'll do one here. Great. Up she goes, and then chug, 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 and then we finished, wherever we finished here. Just as an example, right? So putting on the vertical and letting it expire worthless would be great in a trendy day like this. I could put it on right here and put for $2. It's 5 wide. Boom, boom, boom. I made $3 at the end of the day. I don't even have to close the trade. Yay! How many days like that have we had? How many trendy days in a row have we had where it's just woo like this? We'll pull back and then woo like this, right? Do you remember those days? I can show you what those days were. It was a year ago or more, but it was these days over here. Yeah, back in 2021. 2021 was like, woo, look at this. This was fantastic, right? It'll pull back and then, woo, look at this. Look at these days. These are all days. Imagine the days in between. That was great. And then this happened. This happened. This happened. This happened. This happened. This happened. We're in this like crazy market now. So this putting on a vertical and letting it expire, or putting on, as I was doing, a butterfly and letting it expire at the end of the day, that wasn't working either. So trying to put on a vert and time what direction it was going in, no good. Guessing where to put the butterfly at the end of the day, no good. I missed it. Too many times I risked the whole debit of the butterfly, no profit. Risk either a call or a put or a vertical, which is preferred, and that's it. Don't win because of the reversals. Okay? So, as the day trading program was being created, I found that there were specific times of the day that there were consistent moves, very specific times of day. And this is actually part of the day trading program. It's called times of day, very creative, right? But it is an amazing, ridiculous, fantastic, consistent, accurate roadmap to how to day trade. And some of you have really grabbed a hold of it, like one of our day traders and one of our leaders in the day trading room, Dan, has picked out one specific time of day, mastering, not instead of putting on a day trade at 4 or 5 different times a day, he's mastering one specific time of day. And he has, and he'll tell you this himself, I think he has a 100% success rate. 100% over like 3 weeks, doing it every day with 10 contracts. I could be a little off, but I'm pretty sure I'm close. So this time of day thing really spoke to me. So instead of just trying to figure this end of day thing, he likes the first reversal of the day around 10 o'clock in the morning. And I'm going to show it to you. Is there a way that I could use this day trade? Because I put the SPX end of day thing on the back burner so I could focus on the day trading. But I'm thinking, is there a way I could use this day trading times of day to be more accurate with this putting on a vertical in SPX? Okay, that was kind of my thought. But again, even if I were to find the right time of day, letting it expire because of the reversals that happen, let's say I found the perfect time of day to put it on. Reversal, it's going down. Yep, okay, I can put it on here. But what if there's another reversal? Then I'm screwed. Okay, so reversals in this market kill not only your swing trades, but they can kill this kind of trade I want to put on. It's okay for day trading because they can get in and get out, because they have these day trading rule. They can do it with a cash account, and they can do it with a margin account if they have over 25,000. So the reversals will just, they'll kill your soul. So here is the question and the vacuum that I was talking about earlier. I'm sorry it took so long for me to get to it, but how can I take advantage of the 0-day move? Okay, the 0-day move. What's 0 day? It means you are buying today's expiration. So if it's Thursday and it's 9:45 a.m., I'm going to buy 3/16, Thursday's expiration. It expires today. 0 DTE. Thank you, Zlaco. 0-day move. So question, how can I take advantage of, and I'll abbreviate it like he did, 0 days till expiration, this 0-day move, these moves, how do I take advantage of these moves and somehow lock in the profit before it reverses? How can I lock it in without getting hit with a day trade? Because I know if I buy it here and sell it here, I get hit with a day trade. That's no good for many, many people. It's okay for those of you that have cash accounts, although you might run out of money because it doesn't settle until the next day. But it's not good for those of you that I've instructed to get a swing trading account, level 3, 2000, a margin account, so that you can do verticals. So I'm going to ask the question again and answer it and finally get to it. How can I take advantage of the 0-day move, that intraday move with a 0-day option, right? Same day option. I want that move, same day option. But how do I lock in the profits when it happens, but not get hit with the day trade penalty? And still have that extreme, this is key, this extreme upside potential that the butterflies had when I was doing that end of day, butterfly trade. So look at it again. And I want you to be clear. Have I set this up for you to understand? I want to get that. I've already determined that Apple and Microsoft, too difficult to swing trade right now. Okay, let's do the SPY and the Qs. Very tough. And I get hit with the day trading rule if I like it here and I sell it here. So that doesn't work. So SPX is a great way to do it because it expires and you don't have to close out the trade, so you don't have to worry about the day trading side. So let's do verts. But what about the reversals? Let's do flies. What about the reversals? How do I do it? How do I take advantage of that move with the same day expiration, but lock in the profit, not get hit with the day trade penalty, but still have that extreme upside of the fly? So what do I mean by extreme upside of the fly? Well, if you were to buy, let's just say a 39.40, 39.50, 39.60 butterfly, this is like kind of what we would do, calls, right? Let's just say price is sitting at 39.35 at 2 o'clock in the afternoon. This was one of my strategies, okay? I'm going to put on a 39.40, 50, 60. It'll cost me about $1.50 because I've determined, based on my analysis, that this price is going to go up, and we're going to go up about 15 points. We may go higher, we may go lower, but we're somewhere around here. We are going to be about 15 points higher at the end of the day. And I can just let this thing settle right here and boom, capture it. Now the butterfly, this is called the net of the butterfly. I'm going to capture this sucker right in the middle of the net. If I'm off by $1 or $2 or $3, I'm still profitable. That's what I want to do. Because look, if I hit 39.50, let's just say I nail it. I'm right. I picked the right center strike. What happens with this butterfly is the 39.60 strike, expires worthless. The 39.50 strikes, there's two of them, right? Because I'm going to buy one and sell two. That's what the butterfly is. 1 minus 2, 1. These 39.50s, they expire worthless too, right? Whether they're short or long, doesn't matter. If you finish at 39.50, they're worthless. The only thing that's worth anything at 39.50 is this sucker right here, the 39.40s. The 39.40s, if price is at 39.50, is, yeah, it's worth $1,000. And if I paid $1.50 for it, you mean I can spend $150 with the potential of making $1,000? Well, what if I didn't get there? What if it was 39.49? What if it was 39.48? What if it was 39.47? What if it was 39.46? You mean I could be wrong and make 600? What if it's 39.55, 56, right? You can still make money as long as you can catch it inside the net for a very low cost. That's an extreme upside. And because it's SPX, I don't even have to close it. I can just let it settle somewhere in the net. So again, take advantage of the move, lock in the profits, not get hit with the day trade penalty, but somehow have the extreme upside of the fly, this upside potential, this asymmetric risk reward, risk $1 to make 10. Like how do I get that as well? If I could get all 4 of these and find times of day that are perfect to do this, where I have an 80% chance of winning times of day, I now would have actually the greatest options trading strategy ever known to man. And I'm not freaking kidding. Think about what I've just said like 5 times. Just think about it for a minute. To be able to participate in a move during the day that you can bank on because you know what time of day it's going to happen. When the move happens, you can lock in the profit right then and there. Like literally right on that button, like boom, I just locked in the profit. But guess what? I'm not going to get hit with a day trading penalty. Well, how does that happen? I'm going to show you. And not only lock in the profit that I just made, have unbelievable additional upside that I could find out at the end of the day if I made even more money. That would be sick. It would be ridiculous. And this is a ridiculous strategy. And you're going to see the bells will start to go off in your head as I show you the actual strategy. It will, for all of you, it will click at different times. But I think I've given you a good enough setup. I know I went overboard with the whole setup. But okay, so you understand the vacuum, this crazy market. But in this portion of the market, you see what I want to do? Does everybody see this? If this is SPY, and this is like one of the days, you see what I'm looking to do here? Swing trading will kill me. If I swing trade here, and by the end of the week, I end up here, that's no good. But look at this. Everybody see this right here? That's what I'm looking for, right? I'm looking for the 0 day, the day, today, like yes, now, and then an hour from now, and capture this little moment in time where I can lock in my profit and say goodbye. Literally, I could walk away. I get it. I get out of it. I locked in my profit. I can walk away. I don't even have to turn my computer on for the rest of the day. And I didn't get hit with a day trade either. And there's a little bonus waiting for me at the end of the day. And that's called the extreme upside potential of a butterfly that will cash settle and just blow this trade up in a good way. So those of you that are watching this recording, you don't see the main chat. So I'm responding to a lot of what I am seeing in the chat. So if you're like, this guy has got like a split personality, he's like responding to shit that's not on the screen. I do not have I might have a split personality, but that's not why I'm doing it. There is actually a chat going on. I do. What do you mean I do? All right, let's get going now. Okay. Don't get me started. I can't stop. Okay, so I think I've set the stage. So I'm not going to do this. I'm going to do this. Okay, so times of day. Times of day. What I found miraculously, without any help from anybody in the world, just me trading, and went, what? And then I brought it to the day trading program, and now they are just crushing it as they learn the day trading program. But day traders, is the time of day aspect of day trading, does it not like crush? Is it not like unbelievable when you know what time of day stuff's going to happen? It's really cool. And there's some people that it's like clockwork. Now, some days you open and you don't know if it's going to gap up, gap down. It does different things. And sometimes it's a trend day and you don't get, but 9 out of 10 days, my times of day, it's just crazy. So I'm not going to show you all the times of day because that's part of the day trading program. But I am going to show you concept of kind of how it works. So, I mean, I could use today, but let's find one I could do today. I could do yesterday. Let's see. I want to be able to do like a few days in a row. I think this is last Thursday, so we can go through a week's worth. Okay, so in the day trading program, the first time of day, and literally what I have them saying to themselves, they all follow this. And if they don't, they struggle. But I would say most of the room, especially now that you got, and Britt's been amazing, and Michael and all of you guys that have been contributing. The list is way too long. You all do this in the morning now. I know that you do. This is the open. Okay, this is SPX is the open. And I've got this on a 5-minute chart. The first trade of the day, not including the open, okay? That's a completely different strategy that we're not going to talk about, okay? After the open, post-open, the first trade of the day, we refer to it as the first pullback of the morning. That's what we call it. It's a reversal, but we call it the first pullback because it's the first one. And so if you look right here, can everybody see where it is? Can you kind of see the price action? It's a small one, and what you're not seeing here is you're not seeing the 1-minute chart next to it. And I'm not going to do all this with day trade. I'm just going to leave you with the 5-minute for now. But what you would see here is right here in this moment in time, the 1-minute chart has already done this. That's what this action is. So just watch my pointer here, okay? From this point here, does everybody see how it goes up to here, right? And then it opens here at the top of the red candle. It goes up further. That's what the wick is. And then from there, it falls down to the next candle. Everybody see it? I'm going to blow it up so you can see really close. There are better examples, but it is what it is. This was the day. So I'll just show you what it is. First pullback of the day. We opened here. That's not considered a pullback because it didn't break the low of the high bar. Boom, right? So you go from here, and all of a sudden, price goes from here to here, and then it finishes here, and then to here. Then it goes here, and then it goes here, and then it goes here, 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 here. This is the move. And on the 1-minute chart, what I'm trying to tell you is that this move, this initial move, just this candle alone, from this candle all the way up to here, down to this candle, this is like, just as an example, this is a 5-minute. So if this is a 5-minute candle and this is a 5-minute candle, watch. This is not going to be accurate, but I'm going to do my best here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Open of the next candle. These are what the 1-minute bars look like on the 1-minute chart. Do you see what I mean? They go like this. They already show a mini version of this, but with a lot more candles that gives you the confirmation that price is going down and you just hit the first pullback of the day. That's the first pullback of the day. Boom. This is the second trade of the day. Okay, so the first trade of the day is called the first pullback. I can show you day after day after day. Oh, time of day, it's typically between 9:40 and 10:10. Like frickin' clockwork. What time is this one? Starts at 9:50. It really kind of completes itself a little later, but right in here, look, 9:40 to 10:10. Right in here, right in the zone. 9:40 to 10:10. The second trade of the day happens typically anywhere between 10, I would say 10:05, I say 10:10 to 10:40. That's the second trade of the day. And what is that? It's called the first reversal. So if you opened like this, and that's your first pullback of the day right there, the next trade, and it happens every freaking day. Boom, first reversal, right there. Boom, 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 boom. And these are 5-minute bars. This is not a 1-minute chart, guys. This is 5 minutes. There's a lot of time in here. From down in here, to here, to here, to here, to here, to here, to here, 5, 10, 15, 20, and this is like at least 30 to 35 minutes of action. And it's going from here, like 39, 36, all the way up, this is important to look at, to like 40, 12. 39, let's look at it exactly. Watch this. Let's just say you didn't get, let's just say from here, right? Something like right here, let's just say. Oh, we can do it from here. This is right at 4,000, right? This up here is 40-12. This is a 12-point move. And this is where you could put on, now I'm jumping ahead a little bit. This is jumping ahead. 4,000, 4,005, call vertical. Boom, for $2. Immediately, once this goes through, this is a jump ahead, okay? There's a call debit spread. I'm gonna buy the $4,000 call. I'm gonna sell the 4,005 call. That's called a call vertical, right here. Boom, boom. As soon as this goes through, I'm going to immediately put on a 4,005 40, 10 call credit spread. I'm going to actually sell the 4,005, the same one I sold here. I'm going to buy the 40-10 above it. And I'm going to put an order in for $3. Now, I know it's not going to get filled until we get above 40-10, but I'm putting in this conditional order immediately to just sit there. So I'm sitting on this one. And sure enough, by here, how's this trade doing at this X right here? Anybody? How am I doing? Yeah, at the money. That's correct. Yeah, Cheryl, it's up. It's probably, up a couple of bucks. I'm maybe up $100, maybe 50, maybe 40, maybe 30, but I'm up. How am I doing here? At like close to 40-10. I'm pretty freaking happy, aren't I? But I've got to figure out how to lock in the profit. I'm up. Let's just say I'm up $80. And I want that $80 because what if it reverses on me? This is part of the whole thing. The reversal. This thing's making money. I put this order in. And guess what happens when this thing hits 40-10? Or right before, or right after. Depends on premium. Order filled. This order gets filled. Selling the 405 and buying the 40-10 above it. I just took in a $3 credit after I initially bought the call vertical below it for $2. I just made $100. This is just on one contract. Not only did I just make $100, I'm done. I don't have to do anything. Price could go here, price could go here, price could go here, here. I don't care. There's nothing for me to do. I just created a call butterfly that does not need to be closed. I'll get to that all in. Conceptually, do you get it though? So let me go back. This is just the beginning. It will all make more sense as I draw things, and I just wanted to give you a little taste of kind of how it works. Let's go back to times of day. First move of the day. First pullback of the day. You can see it. Price action Get it. So this is one potential trade. The second potential trade, the first reversal right here. Second potential trade, all the way up to 40.10. Guess what this is? Let's just say you got this one. You put on that vert right here, and you put in another vert right there, and then cha-ching, and then boom, you've got a vert. You got that all done. And then it does this, and then it does this. What do you call this? What is this? What is this? A reversal. So the third trade of the day, sometimes it's the third trade of the day, is a reversal right into lunch. And we call lunch somewhere around 11:30 to 12:30-ish. We call it the lunch box because it just chops like crazy during lunch. So first pullback of the day, first reversal of the day. Now, sometimes it reverses more than once. Sometimes it goes pullback, reversal, 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 then into lunch. This particular day, it just did pullback, reversal, reversal into the lunch box. Everybody see it? Now, the lunchbox is typically a very choppy, unnerving, unwielding, just mess of a trade. So we stay out of it. The first trade of the afternoon, this is freaking clockwork. I know I wasn't going to go through all of them, but I'm going to do it anyway for you. You guys are actually seeing the day trading times of day as we speak. This is the magical one. I love this one. This one, you could set your watch. When things start to chop in the middle of the afternoon, like around 12 o'clock, that's called the lunchbox. The next trade, the first trade of the afternoon, PM, is the move out of the lunchbox. And here it is. Boom. And how do you know? Because it breaks the range of the box. Boom. That's the trade. There's another opportunity for this beautiful convert the vert. Got it? And then there's another reversal at the end of the day. Oh, wow, this one really went. Okay, let's go again, shall we? Next day, this is the 10th. This is Friday. This is the open. What can somebody new tell me that they see? This is on Friday now. I just did Thursday. And I tell you that this happens every single day. What do you see here? Somebody new, answer the question. That's the open right here. What do you see? Casey Ken, first pullback of the day. Look at it. Boom, reversal, little hammer candle, confirmation. We call that hammer candle confirmation. There's the first move. Absolutely clockwork, picture perfect time of day, 9:50 to 9:55, right in that wheelhouse. Can someone tell me the next move of the day? That's the first pullback. Someone brand new, open. There it is, right? Any newbies in the room want to take there you go, obtuse angle. There you go, reverse, right? Here it is, boom. What happens after that one? Look at this, reversal, boom. Absolutely beautiful. Look what happens again, reversal, a little harder to spot, totally breaks the moving average, is done. Whoop, fantastic. Look at this, reversal, again, 12 o'clock, lunch. Now that was quite a day, wasn't it? And obviously it's a Friday. Fridays are going to have more, Fridays are going to do that. That's fine with me, right? Reversal, reversal, reversal into the lunchbox. And there's your range of the lunchbox. Let's see, go a little bit more. And then I'm going to move on. Oops. Okay, so there's your move, doink. Okay, and then there it comes up to here. And so that's your range. That's the box. Everybody see the lunch box? Look at this, 1 o'clock in the afternoon. Is this crazy? Have you ever looked at the markets this way before? Never. I'm telling you, you've never have. You've never seen it with this kind of accuracy. First pull, you never did, like, it was there the whole time. First pullback of the day. Reversal, reversal, reversal into lunch. Boom. Look at this lunch box. You don't want to trade here. You know why you don't want to trade here? Because all of the day traders that traded in the morning that lost money, not our people, but everybody else that lost money, they revenge trade to try to get their money back here. They long it, they short it, they long it, they short it. And that's what causes the chop. You also get lower volume because the big boys are having lunch. So if the big boys and the big girls on Wall Street and in Chicago and everywhere else, if they're all having lunch, so there's low volume, you just have a bunch of Robin Hooders trying to get back the money they lost, that creates this volatile chop. We don't trade it. What do we wait for? The first trade of the afternoon, which is what? Out of the lunchbox. Boom, boom, boom. Breakout of that level. Like freaking clockwork. Hello, breakout. Boom, 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 boom. Reversal. So now I'm going to tell you what happens at the end of the day. What do you imagine happens after this move out the lunchbox? That's what this is called. This is called out the lunchbox slang. What do you think happens after this move at some point? The first reversal of the afternoon. You guys are getting it. Reversal, right? Boom, reversal. Now these look small, don't they? But these are perfectly fine because if I can get in here and get in here and lock in the profit, do I care if it comes back down? I don't need a lot of movement. Look at the range. 38.45 to 38.70 something. This is a 30-point move. If I'm doing 5 wides, I only need a total of maybe 12 points to get this thing to work. I don't need that, right? So this is perfectly fine. I could get in late and still make it work. All right, get more contracts. Look at this one, reversal, boom. Look at this one, reversal. Look at this one, boom, reversal. And then the last reversal, boom, boom, into the close. That's it. Now, maybe you didn't take the last one, or maybe you did. Now, there's another whole part to this thing that I haven't even got to that's going to blow the top of your brains out. So please don't go anywhere. When I say that this will blow your brains out, please, this is not hyperbole. When you get this part at the end, you will freak. So please hold on. So does everybody get times a day? Okay, times a day. And learning how to read price action. So I'm going to teach you that. You're going to learn it every single day. Go through all the modules, all the videos, do the swing trading, use your trade tracker, enter my alerts. Some work, some don't. Learn the 70-40 plan, all of the things. Just go through the swing trading program. I promise you, it's price action mastery. Every video covers some action of this, some aspect of this. But now you start to see where you could put this thing on. It doesn't matter where you are. You could be driving along and you open up the 5-minute SPX or the 5-minute SPY and you see this in the morning. Pull over and get yourself a boom boom and a boom boom and you're done. And then you're sitting at lunch, at work, la-di-da, ready to go back to work. It's 1 o'clock, 1:05, 1:15, 1:20. Oops, let me put one of those on. Boom, boom, order filled. And then I put this one on. I don't even have to watch it. When I take my first break at around 2 o'clock in the afternoon, I'll see that I've completed the transaction and I locked it in. And if, oh, by the way, I decide to get out early, it's 3 o'clock, banker's hours, reversal, boom, 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 lock it in. I mean, you just have to be careful not to cross your strikes here. The exact same call strikes. Now, what's cool is you could put a ConvertTheVert on over here and a put vert on over here, and you don't have to worry about crossing these strikes because these are calls and these are puts. So don't worry about that. So that's one day. This happened quick. Look at this. Markets open here. 5 minutes, boom. 10 minutes, boom. 15 minutes, boom. 16, 17, 18 minutes in. Guess what this is called? This is at about 17 minutes after the open. What's that called right there? The first pullback of the day. Boom. What's this called? The first reversal. Exactly. Second reversal. Boom. And what does this look like to y'all? Looks like a lunchbox to me. There's the first trade out of it. Boom. The first reversal out of the lunchbox. Boom. The next reversal. Boom. The next reversal. Boom. The last one into the end of the day. Boom. It's the same freaking thing. Isn't this crazy? It's the same thing. All right. So now that you got that, let's talk about the strikes. Okay? Talk about the strikes and how to put this kind of thing on. The idea, if you understand what a butterfly is, okay, let me just talk about a butterfly for a second. And I'll just do it like around here, 38, 80-ish, okay, somewhere in this range. If I did this, 38.80, 38.85, 38.90, these are all calls, and a butterfly is you buy this long call, you sell these two 5 above, or you can do 10 wide, 15 wide, 20 wide. 5 wide is the most economical and makes the most sense initially. You're better off doing multiple contracts of these than you are doing, 2 or 3 20 wides that are going to be very expensive. But once you understand the concept, you can do whatever you want, right? And then you're going to buy one of these out of the money. So typically what you do is if price is sitting at around, 38.75-ish, 76, 77, just sort of almost at the money here, you get like an at the money call. You sell 2 of them above and you buy one of them above that. You can see it's equidistant, 80, 85, 90. And typically this trade, if price is at the money or just below, is somewhere around $2. Now, if it's really out of the money, like if you were at 38.60, 38.65, if that's what price was at, and you put one of these on, you probably could get it for like $1.25, maybe even $1 if you're really out of the money. But we're not doing those, okay? Because what we want to do is spot the reversal or the first pullback of the day and immediately get in at the money. Maybe even a little out of the money, just slightly to get a better price. And I'll show you that in a second. So let's just say it's 38.75, 38.76, somewhere in this range, 77, right? 78, and you do one of these. You do understand how this is constructed. So look at the construction of this butterfly. I want you to really understand what a butterfly is, because a lot of you may not have looked at it this way before. It's really 2 verticals. You bought the 38.80 call. You sold 2 of the 38.85s, but let's just take one of them. Bought 1, sell 1. I'm just going to use one of these strikes for now. If you look at this by itself, this is called a call debit spread. This is a call vert. So if I was at 38.78 like before, and I want to just put on a vert and hope price went up, this is what I would do. I would do a 38.80 by 38.85. Buy the 38.80, sell the 38.85, and instead of spending all that money on a 38.80, this thing would probably cost me like $2, $2.50, depending on how close I am to the money. If I'm a little further away, like if I'm at 38.79, this thing's going to cost me $2, maybe $1 $38.80 to $2. If price is sitting right here at 38.8150, it's probably going to cost me about $2, maybe 205. If price is sitting at like 38.82, it's going to cost me around 215 to 220. You see what I mean? As you get more in the money, it's more expensive. So I like it right sort of at the money. So if price is sitting at 38.79, this is the bird I'm looking at. The one that's just slightly out of the money by like $1. If I can get, if I can get it. Everybody understand? Everyone see that? That's half the trade. Now the other part of the butterfly, if you look, no, not yet, Mahavishnu, don't jump ahead. The other part of it is this 38.90, right? So I'm buying a 38.90 call when I get this fly, aren't I? But you see there's a second one here. So that's this one. So let me just do it like this so you'll see. Right? 38.90 on top, 38.85. If I were to sell the 38.85 and buy the 38.90, I want price to go down. This is called a call credit spread. In fact, it's for a credit because the 38.85 is going to give me a nice whopping credit, and the 38.90, depending on where price is, of course, the 38.90 is going to be less expensive. So this is for a credit. The call debit spread is for a debit. Do you see how the 38.85s, you see how the 38.85s are the same here? That means I've got two of them. And if you have two of them, and one of these and one of these, you just created a butterfly. So a butterfly is really a call debit spread on the bottom and a call credit spread on the top, sharing that strike, sharing the short strike. 38.80, 85, 38.90, 85. They're sharing the same. This is a butterfly. And the idea of the butterfly is to try to nail it right here. Because if you can, you make the spread. You make $500 minus the cost of the fly. That's how they generally work. I want you to also note that if you do not get inside the butterfly, if you're down here in price at the end of the day, all of these calls expire worthless. You make no money. And if price expires here where everything is 100% of the money, it's a total wash. It's a complete wash. The 38, let's say, I'll show you an example. 3,900. Let's say the price finishes at 3,900. The 38.80 makes $20. The 38.90 makes $10, right? You with me so far? That's $30 of profit. But the 38.85s that you're short, you're going to lose $15 because you're short these calls. Times 2, 15 times 2 is 30. It's a wash. Nothing happens. Nothing happens down here and nothing happens down here. You just lose the debit. And that's one of the parts of it that I don't like. If I bought this thing for $1.50, the way it sits right here, if I come down here, I lose $1.50. If I'm up here, I lose $1.50. But I'm going to do this in such a way that I can't freaking lose. So how do I do it? Price opens here, pulls back. There's the first pullback of the day. It comes down to 38.78 and starts to move up. Do you see what I'm going to do? I'm going to buy the 38.80 call vert. 38.80, 38.85 call vertical. I'm buying this and I'm selling this, and it's going to cost me around $2. I just know that that's what it is. It's about half the width of the spread, but because I'm a little bit, it's a little out of the money, it'll be a little less than half. So it's about $2. In some cases, it's $1.90, $1.80, but I'm just going to use $2 for round numbers. Is everybody clear up until this point? This is the open of the day. This is the first pullback. Price is at around, let's just say 38.78. It's starting to move up. It's getting close to 38.80. I'm going for that very next strike, 5 wide, as you can see. It's going to cost me $2. Everybody got me so far? And then I hear those beautiful words. Yeah, Roy, you could do limit order, $2. It'll fill right away. It's very liquid. If it doesn't fill at $2, change it to 205 and get filled. Okay? And then you're going to hear the two beautiful words, order filled, right? You're going to hear that, and you're going to be very excited. Now you're in the trade. And now, after the first pullback, what happens? Well, it does this. But you don't wait. You immediately, once it fills, you immediately put in the credit spread. So somebody tell me, what is the credit spread? If I did a 38.80, 38.85, what's the credit spread I'm going to add immediately? Well, you know you're selling that, right? So that's your very first number, 38.85, immediately, right? It's that number. And then just go up 5. If you're doing puts, you go down 5, 38.90, correct. You're going to sell the 38.85 and buy this. It's on the other side of the column in your Option Station Pro. I'm going to show it to you. And it's going to be, and you're going to put this in. Now, you could put this in for 280 if you wanted to, just to make it simple. And there's a lot of versions of this that I will get to, because I want you to see like the different tricks that you can do with it. So you bought this for 205. Or yeah, we can say 205, okay? 205. You immediately put this in, but it doesn't fill right away because price has to move up to 38.90. It only needs to go up $10. It doesn't need to go up 40, 50. It doesn't. You don't have to wait the whole day. You only need about a $10, $12 move. And you've secured, at least that in your mind, that that's going to happen because of the times of day that you get these moves. And these moves are rarely less than $12 to $15 moves. Yes, they can go back like that, but not before they get a $10 move. And I'm going to show them to you. You immediately put this trade on into your queue. And when price gets to close to 38.90 and the credit gets close to 22.80, you're going to hear, and guess what you're going to have in your platform? Long 138.80 call for whatever. Short 138.85 call for a credit of blah 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 blah. Short 38.85 call blah 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 blah. Long 138.90 call blah 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 blah. That's what it's going to look like. You're literally going to have that. Not only that, in your profit and loss, it's going to show $75 credit. Why? Because you bought the first one for $205. You sold the second one at $280. You just locked in $75 profit. There's nothing anyone can do to take that $75 away from you. How's that possible, Michael? What if price goes up here? It's okay, because if you look at this, what is this really? This is really nothing more. When you collapse all of them onto each other, which you don't even have to do, you now have a call butterfly that can expire, can cash settle on SPX. There's nothing for you to do. If price reverses on you and drops to 3,700, what happens to your $75? Nothing. Because think about it. really clear, okay? If price reverses, remember, we were at 38.79 when we put the trade on, right? We opened, and then we went like this, and this was the pullback. Everybody remember this whole part of the deal? And then we put this on, and then we put this on, and everything else. What happens if the market goes like this and goes all the way down to 3,700? Look what happens to your calls. Yeah, if price finishes below this at the end of, you have the pullback, you did this, and then it reverses and price is now below 38.80. Yes, exactly, Mahavishnu. 38.80s will expire worthless, expire worthless, expire worthless. You just kept the credit. But what if it blows all the way through my butterfly? Usually when I do a butterfly, if it's up here, it's a loss. It's a wash. The reason why it's a loss when you do just the butterfly, it's because you put it on for a debit. So you lose the debit. But we didn't do that. We put on a debit, followed it with a credit to yield us that. So it doesn't matter what happens to the fly. And there's a big but. The big but is, okay, I just made $75. Cool. Okay. And let's say, I like this strategy, Michael, but $75, that's a little weak, What if can I do 10 of them? Can I do 5 of them? Sure. 5 times 205, right? Would cost you $1,025 to put on 5 of them. Okay, so if you have that in your account, you can. You could put on 2, you could put on, but let's just say you did 5 of them. 5 times 75. And it's a pretty safe trade because you're using the times a day and you're getting a move. You made $375. Except for one thing. What happens if price finishes somewhere inside the net of the butterfly? You just turn your computer off, you go back to work, and when you get home, you turn it on, or you open up your phone and go, where did the SPY close today? Oh, I don't know. It finished at 38.84.50. Oh, yeah? Did it really? Look at the kicker. If you finish inside the fly, there's more money deposited into your account, and there's nothing you need to even do. So let's just use this example. Thank you, Ken T. Let's say it finishes at 38.84. These expire worthless. These expire worthless. 80 from 80 plus 450. That's 450 times, 10. So that's $450. And if you did 5 of them, that would be, I don't know, $2,225 plus the 375. Wait a minute. Are you telling me that this strategy just made me like $2,600 on one freaking trade? A boom, and then finished in the boom? There's no stock. There's no assumption. There's no exercising. It just cash settles. So, 38.80. Okay, so I'm going to move on from this in a sec. So here, if it finishes at anywhere north of 38.80, let's just say it finishes at 38.81. You bring in an extra $100 plus that 75. If it finishes at 38.82, you bring in an extra $200 plus the 75. 38.83, that's $300 plus the $75. 38.84, $400 plus. And if you nail it at 38.85 right here, that's $500 plus 75, that's $575. And that's one contract. What if it goes 38.86? $400. Why? Because you're going to make $6 on this call, but you're going to lose $1 between 85 and 86 times 2 of them in the center. You lose $2. That equals 4. 38.87. Let's just keep going up. 300. 38.88, 200, 38.89. You see? You can make money anywhere inside of the, inside of this net on top of the 75. And it's free. In other words, you already made your 75, you did one contract, and you got a $75 credit that's sitting there. You can never lose it. You just made 75 bucks. You go do it again later on the day, it's 75 bucks. You do a put one later on the day, it's maybe you did one and it's $100. And you made like a couple of $100 doing these three things. And now you've got 3 flies sitting around. So now watch this. Watch this. If you really want to have fun, pull back, boom, doom, 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 pull back, puts, boom, boom, boom. So those are puts, those are calls. Reversal, be careful not to cross my strikes right here. I won't. Boom, 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 done. Those are calls. Boom, boom, boom. Those are puts. It's still going. Let's just make sure I don't screw up with these puts here. You know, out of the lunchbox. Yeah. Boom, boom, boom. Keep going. Boom, boom, boom. Another call one. Reversal. Boom, boom, boom. Another reversal. It's too close to close our strikes. Reversal. Oh, I can get this one. Boom, boom. Come all the way up here. Boom. Holy cow, this is great. Reversal. Oh, I can get one more put thing in here, I think. Boom, boom, boom. Yeah, flock of butterflies. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got 10 freaking flies just sitting there waiting to hit somewhere. You got to get one of them. Something's going to hit. Now what happens when you work your way up and you start doing quantities of 5? And one of those sucker hits. You work your way up to doing 10s. 10, 10, 10, 10, 10. You do a 10 wide and 10 contracts, and you hit that sucker, that's $10,000 when you hit it. Not to mention everything that you made along the way. And don't worry, if you have the same strike with your puts as you do your calls, because they're separate contracts, right? A put is not a call. You don't have to worry. It's when you go back to put the puts on again, you just want to make sure. Now, you can cross the strikes as long as they're pluses and minuses. So in other words, if you're long the 38.80 call and short the 38.85, long the 38.90, you cannot do a 38.85, 38.90, 38.95. You can't be long the 38.85 if you are already short the 38.85. That's what I mean by don't cross strikes. But if you want to do one up here at 38.90, go right ahead. Whoops. Won't bother you at all. You could easily do a 38.90, 38.95 as an initial vertical because you're going long the 38.90. You're already long the 38.90. These won't conflict. It'll just show that you have 2 of them. No problem. You just don't want to do 38.90 short. You just don't want to have, you don't want to have a long and a short. Because if you put on the long while you're already short, it'll close it. And if you short something that you're already long, it'll close it. So just don't do 38.85 short and a 38.85 long. You can have them both be short or both be longs, but not that plus and minus on the same strike. Okay. Now let's look at this. Someone said, can you do this with puts? Of course. So let's do it. Let's do it, man. Let me show you what it really looks like. And then I'll take some questions and show you some cool things that you can do with it. There is like a couple of other things that are pretty cool. So this is SPX. I'm doing SPXW. That's what it is on TradeStation. That's the weeklies, right? You'll see every single day is here. When you do SPX.X, you're only going to see the monthly. So it's SPXW.X. I don't know what it is on TOS. I can just tell you that what it is here. So tomorrow is the 17th. So I'll go to 17th. And we're at 39.60, right? So let's go to Vert. Let's just think about this for a minute, right? We're at 39.60 right now. Okay, so this is close. And actually, this is really not that far off. So everybody see what I just did? I had the wrong strikes here. So 39.60, 39.65, we're right at the money, 39.60. And look at the price. It's about 250. Chances are it'll probably be closer to like 230, 240, but I may not want to pay that, right? So what I do is I'll go up 5 points. Now, obviously, because, this is not real-time action, this is probably going to be closer to about 185. Okay? Is everybody clear so far? Little out of the money, and it's going to be cheaper. Now, as soon as this goes through, boom, I just spent $1.85. Order filled, okay? Immediately, I'm going to go to this side of the transaction, right? The sell side of it. And because I sold the 39.70s, okay, I'm going to go back to this, 39.60. Let's just do this one. Because I sold the 39.65s, I'm going to come over here, find 39.65, right here, 39.65, 39.70, right? That's the one above. And I go to the sell side over here. Boom. Now look at that. You see what I did? So if the first one, let's just say, was 185, the 39.60, 65. Right? And I know I went back and forth between different strikes, but play with me here because the market is not open right now, and so it's not accurate pricing. As soon as this goes through, I go right to the short strike here, 39.65, that's the short strike. And I go to the bid side or the sell side and I sell the 39.65 and I buy the one higher so that it ends up looking like this. 39.60, 60, 70. There we go, right? So I'm going to sell the 65s and buy the 70s for a credit. But I don't want 240 credit. Now I know I paid 185. Now you could do 240, couldn't you? You spent 185. If you end up getting 240, and let's say you did, 3 of them, what does that come to? $65 times 3. What is that? $195? What's wrong with that? Was it 55? Yikes. One. Yeah, is that right? 3. Yes, 55. Okay, so that's 165. Okay, 165. You did 3 of them. Credit locked in. If you did 3 of them, so that's okay. But you know what? I probably goose that up a little bit. So you have to understand if you're doing 5 wide, the cost is going to be just less than half the width. So if I'm doing it 5 wide, I want to get it for 210, 205, 200. That's kind of where I'd like to see it. When I look for the credit, I want to get somewhere around $3 or 295, 290, 280, somewhere in that range. Because if I can pay around 2, and you can see, so someone says, well, how do you know how much credit? Well, I'm showing you, it's a lot of it's based on what you're looking to do. If you want to start out slow and just learn it. Let's just say you bought it for 210. And you're like, oh my God, all right, I'm in. And you're like, you know what? I could wait for the $3 move, but I got in a little late. I might not get all the way up to the $3. I don't know. I might not. Let's just keep it simple. 75 bucks, 285. Let me just put in 285 because that gives me $75. If I could make $75 just trying this out at the beginning, and then I have a butterfly sitting there that I could make up to another $500 on, that's fine. So just look at trying to get less than half or more than half on the credit side. So does that make sense? So your cost is going to be less than half the width. That's your cost. The credit that you're going to get on the other side is going to be greater than half the width. But just remember, when you put them together, there's a profit there. And I might as well show you this now before I forget. It's another little addition. You don't have to take notes on this. It's pretty simple to figure out. Do you realize that, let's just say you did this for $190. It cost you $190. Do you realize that you could just do a $2 credit and get it almost with 5 points to the upside, and you're going to have a $2 credit? Now, $260, $280, $3 credit is going to take a little bit of work. It's going to go up a little higher. But did you realize if you just did this, look what happens? Somebody tell me, what do you have here? This was your cost, and this is the credit. Yeah, Slatko. Yeah, Pizza Mandate. You have a free trade. Not only that, the $10 pays for the commission, for that initial commission, and you got a free trade that just sits there. There's nothing wrong, and I like doing these at the end of the day. Because if I can get in and get out super fast and be sitting with a butterfly, and we're at the end of the day, like with 10 minutes to go, do you realize, I'm going to show you another wrinkle. What if it cost you $2 and there's 12 minutes left in the day? Let's just say. And it cost you that. And when you put the other one on, the credit is only $180. Now what? It's the end of the day. There's only 12 minutes left. You've already done a bunch of verts. You've already made money. Do you see what this is? Yeah, what did it cost you? If you do a call debit spread and immediately take the call credit spread after 1, 2, or a 3-point move, it cost you $20. You now have a $20 debit. No matter what happens, you lose $20. Except for what? If you pin it in that 12 minutes or finish anywhere inside the fly, you'll make back the $20. All you have to do is be 20 cents in the money. Listen to me. You only have to be 20 cents inside the money to break even. So you can put these on and put the credit on for a deficit. You don't even have to do it for a credit. Look at this. I know somebody that does these. And that's the max. 10 of them. And then sells 10 at the exact same price plus 5. So if they get it for 170, they're doing 175 credit. It happens, it's almost immediate. Ching, ching. Even. They want 10 free butterflies every single day. Do you think if you put on 10 butterflies every single day, once in the morning and once in the afternoon, that would be 20 total, 10 and 10 every day, do you think you might actually hit one of them? Yeah, I can do it again. Let's say you did 10 of them, but instead of, you do out of the money, a little bit more out of the money. So instead of it costing you $205, they look for 170 to 185 cost. which means you're going to have to go a little out of the money to get that. And they do 10 of them. But they immediately put the credit, let's say they get it for let's say the fill is 175. That's what they got filled. Plus 5. They add $5, 180. They immediately put on the trade to sell 10 of them with a $1.80 credit. Not $3 credit, not $2.85 credit. Actually, the exact amount that they got the trade for plus 5. Why plus 5? To pay for the commissions, because if you get 10 of them, it adds up. And now what are they sitting on? They're sitting on $50 profit, which literally just pays all the commissions. And they got 10 flies in the morning. And then they do another one in the afternoon. Another 10 in the afternoon. So if you did this every single day, can you see that it cost you nothing? Can you see your cost at the end of the day is 0? You have 20 free trades every single day. Do you think one day this week you might actually pin that fly? Do you know how much money you make if you just pin one time? Somebody tell me. If it's a 5, I'm talking about 5 wide. Yeah, $5,000. And that's if they do it once. So on Monday, 10 and 10. Tuesday, 10 and 10. Look at it. 10, 20, 30, 40, 50, 100 butterflies sitting out there, all for free. One of them's got to hit. What if you hit it twice in the course of the week? 10K, and it cost you nothing. Because when you get this trade, you're going to be able to fill this pretty fast. It'll probably start at about $1.20. It'll get to $1.75 pretty quick. All you need is about 3, 4, 5 points. Boom, it hits. You don't need 10 to 12 points for it to happen. Always 0 day. This is just a little trick. It's just, I want you to think about it. My initial formula is $2, $3. And you make 100. But it might cost you 205. And you might need to get down to 290. So maybe only make 85. And you might get it for 210. And you might get out of this thing, at 285. So maybe only make 75, right? But one contract, that's kind of what I look at. Debit, credit, doing it 5 wide. Definitely same day. And you use the times of day when you can spot those reversals. It's every freaking day. Want to see another day? Here you go. Pullback. Reversal, reversal, into the lunchbox. Look at the lunchbox. Look at the trade out of the lunchbox. First reversal after lunch. Second reversal after lunch. Third reversal after lunch into the close. Every day, it looks like this. Everybody see it? The pullback trade, the reversal into lunch. Stay out during lunch. Wait for a break of this range. There it is. Doink right there. Get your vert. You don't need indicators. Look at this. This is lunch. I just got to wait for a break. Boom. There it is. I'm going to get it right there. Right frickin' there at the money. Boom. Boom. Guess what? Order filled. You got your credit. Reversal. I'm going to wait 3 frickin' bars, whatever it is. 1, 2, 3. Okay, I'm going to get it here. Boom, boom. Put it in. Boom. You got your butterfly. Another reversal. I'm going to wait. 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 Okay, now I'm going to get it. Boom, boom. Reversal. It kicked in right here. Not reversal. I'm sorry. The put credit spread turned it into a butterfly. So it's the same thing on the put side. Somebody wanted to see that. And then I'm going to take questions, because this is where you really learn, is when you listen to other people's questions. Let's just say it's 39.60 and you think it's going to go down, right? Do the same thing. I'm going to buy the 39.60 put. So I go over to the buy side and I find 39.60 and it's right there. I'm going to buy it. When I buy 39.60, it simultaneously sells the 39.55. Look at this, 205. Look how accurate this is. Boom, boom. And then immediately, once this fills, I immediately go to that 39.55 strike. Come down, 39.55, 39.55, sell, boom. Selling the 39.55 and even lower the 39.50. So what does that look like? 39.60. Oops. 39.60 put. We buy it. 39.55 put. We sell it. That's called a put debit spread for 205. Immediately I go in, take that short strike, 39.55 put, go lower, 39.50 put. I'm going to sell that. I'm going to buy that. So I end up with two of these. And I'm going to put that credit in. And like I said, you want to put it in at 205, goose it by $5. What if you just did that? Goose it by $5 to 210. It fills, you just made $5, and now you have a free trade. Want to put it up a little higher? 265. What's wrong with making $60? You want to do two of them? Do two of them. That's $120, and then you have two flies. Crazy. So if you catch the two-step butterflies you describe and always catch the net, you can really make trades with infinity. Make trades with infinity. You don't even have to catch it in the net, Kevin. Kevin asks. I mean, if you just put the trade on and put the second trade on and then boom, and made $75 and did that 3 times a day, part-time, 210 what does that come to? $225 a day. Can you make $225 a day just doing that and never hitting the net? Yes. If you hit it once and you rack up another $500 or $400 or another $300, a couple times a week. I mean, what are you doing? You're making, if you could do this and just make like $200 a day and like every 3 days you hit somewhere in the net so that you end up averaging like 300 a day and you only did it 4 days a week. Do you realize that's 1,200 a week? Who makes 1,200 a week part-time spending like an hour on the computer while they're still at work? I mean, that's $60,000 a year. Just trading 2 or 3 times a day, 2 to 3 times, only setting $75 as your, spread, so to speak. And you make on average, maybe you lose one here or there, maybe on average, maybe $200, but you get inside the net maybe 2 or 3 times throughout the week so that your average is around $300 a day and you only do it 4 days a week. That's $1,200 a week just with this one strategy. I've given you the times of day, the methodology, and the kicker at the end, and you don't have to close it. It closes on its own. So I promise I'm going to get to the next question. I've got a bunch to go through. Did I answer the question? How can I take advantage of 0 DTE moves throughout the day? Check. Can I lock in the profit? Check. Can I do it without getting hit with the day trade rule? Check. And can I get an extreme payoff like a butterfly without having any risk at all? It's literally a free lottery ticket every time you do it. Check, check. Have we accomplished something amazing here? If you're not like, holy crap, then I suggest you watch this again. Maybe you'll get it again, but I think you guys got it. What a lot of people are asking are, what if you put on this trade and then it goes like this and you never get to put it on? That's why you go by the times of day. Look at these reversals. Okay, this is another thing. Someone said, well, what happens, if you put it on and it reverses before you get your credit? If you learn price action and timing, look at this day. Pullback. Obviously, it's a pullback. You take out all of the highs of the low bar and you're getting it here, or you're doing it here, right? But look at the move before the reversal. The move before the reversal in this instance would be, I don't know, somewhere around here, 38.30. And the top here is 38.73. This is 40 points. You're getting your credit. Look at the next one. This reversal happens right here, 38.60 with a low of 41. This is a 19-point move. If you got in here and you got your credit, this is 19 points. Next one. Look at this one. This is like 38.40 with a high of what? 38, almost 3,900. That's 60 points. What's this one? 3,900 down to 30. This is 40 points. What's this one? 38.60 up to this is 37 points. Do you see what I mean? And think about it. If you are doing 5 wides and price is sitting at 49, just check this out, guys. Look, price is at 4, and obviously it's like 39.40, all right? Price is at 49, and you do the 50-55 and you get filled. And then you want to do this one for the credit. You realize that when you get to 60, you're going to have at least close to $3. Let's just call it 280 credit, almost the full credit that you want when you get up to 60. So the move from 49 to 60 is how much? You guys following this? It's 11 points. So anywhere between a 10 and 12-point move, you will get your credit. Understand? Is everybody clear about what I just showed? This is really important because it's a fantastic question. What happens if I don't get my credit? Well, if you waited to here and put it on, I can see, and you might have to wait longer. And that maybe that doesn't happen. Maybe it does this and does that. But if you see the reversal, when the reversal happens, all you need is 10 to 12 points, and that's maximum. It could be even less than that. And in most cases, from here to here, 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 it's at least 30 points. In most cases, it's 30 to 40 points. Sometimes it's a 20-point move, and in rare instances, 15 points. Rarely does the S&P move less than 10 to 15 points before a reversal. Just look at the price action. Look at this, 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 look at this. None of these moves were less than 20 points, were less than 15 points. And you only need 10 to 12 to complete your transaction. You see how it's pretty foolproof? The difference between in TradeStation SPX.X and SPXW.X, this is only a monthly contract, and it's an AM contract that closes on Friday mornings. So you can't hold this on this particular Friday to the end of the day. In fact, you can't even trade it after Thursday. This is monthly. We're not doing these. We're doing the weekly SPX, which you can trade every single day of the week. Now, there are times, let's just say it's the end of the day, and I got to put fly right here, and I don't know where price is going, and it's at the end of the day, and this thing is up like crazy, and I can close this thing for like $250. I already got an $85 credit. This is showing plus 25. I don't know. Is this thing going to just go through the, I can afford a day trade. I'm allowed 3 of them in 5 days. Go ahead and close it. Manually close it and take the money. Now, if it ended up pinning, you'd be pissed off. But if you want to close one at the end of the day because it's up by so much and there's the possibility that price could just drive right through it, you'd still be okay with your 85. But look, you could pick up another 250 right now if you can afford putting the day trade on in terms of the pattern day trading rules, then go close it. There's nothing wrong with closing it. You have that option. No, there's no change in burn level here. If your burn level is $250 to $300, then one contract works perfectly. But remember, it's a great question. You know, if you have a burn level or a pilot position, your pilot level is somewhere around, say, 240 to 260 on any given trade. That's your pilot. What happens when you do one of these trades at 205? You lock it in at 285. You just made $80 credit. Can you do another one? Yes or no? Even though you've just used your burn level, can you do another one? Of course you can. You locked in the profit. You can't lose that initial allocation. So you can do another pilot again and again and again and again and again. I've noticed over the past week that the first turn bar on the squeeze worked really well as a trigger to put on the spread. Do you think that? Yeah, absolutely. Listen, momentum. What did I tell you? If you're in the masterclass here, you're going to learn about price action. First pullback of the day, look at the indicator, the turn. Second red bar is called the turn, right? Second dark green bar is called the turn. And when you see momentum and price move together, it's a beautiful thing. 5-minute momentum, 5-minute price. 5-minute momentum, 5-minute price. Momentum, price, momentum, price. It's freaking great. It's just one more confirmation. You know, and then when you get the day trading program, you'll have all the internals and, you know, there's more advanced ways of doing this. And I'm going to do an advanced ConvertTheVert for those of you that already have it, but don't have day trading. It's really very simple, guys. There's no, it's not a difficult trade. You're basically putting on one vertical and immediately putting on the other vertical for a credit. You just goose the credit to where you want it, 280 or whatever it is. So if you bought this one for $2 and it goes through, you just put on a trade, put on a call credit spread for 280. It's not going to go through right away, but as price moves up, boom, it'll get hit. If you do a put debit spread, with price coming down like this, and it goes through, you immediately put on a put credit spread using the same short strike for the credit that you want. And if price moves down, doink, it'll get hit. That's it. There's nothing else to do. Guys, if you want more on this, but you don't want to have to watch this whole video again, if you don't want to do that, there are a whole bunch of videos about this. Here, I'm going to show you exactly for more on ConvertTheVert. Yeah, just go to the masterclass trading room where you came in tonight, the same module. And in the search, right here, go right here. This is where you logged in, right? Here's your best ofs, by the way. And when I mentioned earlier, understanding verticals. I mean, these are some great videos in here. But here, these are the archives. These are all the archives, right? Just click on search and type the word convert. Look at that. There's 3 other videos on converting the vert. 3 of them. So that's where you can get some more info. All right, let's check out some results here. Okay, the other Michael, I've hit 9 out of 10. Yeah, I think that's pretty good. Ken T, just did sim, but got my 3 credit pretty easily. Awesome. Hey, 3 times? That's awesome. Who else you got? Kenny G, 5 out of 6 this week. Great. Roya, did 2 butterflies on sim yesterday, made $727. That's pretty awesome. Let's see who else. Bama Boy, 3 out of 5 for $675. These are real results. I did sim trade today on 3 trades, made $909.
That's great. I think you're ready for the real deal. Traveling Man 98, 4 for 4, 220 profit. Sim, no pins. That's okay. You will pin it. Where's John FLL? He pinned it today at 39.60, which was awesome. I had $5 below it, so I just missed pinning it. Bob in New Hampshire, let's see what you got here. Here it is. Well, that is a vertical for sure. I know it's kind of small, but you should be able to see here 150 debit followed by 225 credit. That's called a $75 profit. Excellent. Nice work. Very good. Thank you for sending me that little screenshot. Let's see. What else do we got? Kenny G, 5, 6 this week. Take 1 or 2 per day. Oh, you already did that one. Let's see who else. Okay, let's see if anybody else. Raisin Fund. Michael, last week I traded 4 days. Caught the net 3 of 4 days. Missed the 4th day by $2. Wow, that's great. First day, 1 butterfly. Day 2 through 4, 3 butterflies. Made $1,160. Started with $800. My first week using ConvertTheVert. Yeah, that's pretty excellent. Nice work. I did 1 live today and got $105. Very good. Very good. All right, so we're just finishing up. Thank you, thank you, thank you. Great strategy. Go all in. Yeah, Legacy Elite. A lot of people here have Legacy Elite. Best bargain. Loving it. New to Legacy Elite. It's awesome. Yeah, Bama Boy, you just got in. That's great. All right, guys, that should do it. All right, hope you enjoyed it. Plenty of videos. Just search for the word convert. You'll see 3 other videos about this. And then I will be doing an advanced ConvertTheVert video really soon to show you some more ways to tweak the strategy and how to read the 5-minute and the 1-minute charts together like we do in day trading. I'll see you at the next one. Enjoy it.